Okay, so it's time for year-end prep. Don't panic though, I got you. First though, let's get comfortable. All right, let's do this. Hi, I'm Ashley Hamilton, Tax Manager at Complete Payroll. Welcome to another episode of Ashley Explains, where I lay down the facts about tax. Let's get started. First, let's talk about year-end adjustments. The last possible check date that can be used for any adjustment is December 31st, 2018. If you get your adjustment done before then, you have nothing to worry about. Otherwise, you risk having potential penalties and interest from late taxes, especially if you have sizable tax liability. So, what am I talking about? Bonus runs. Enter these as soon as possible. The first half of December, if possible. Typically, bonus runs have large wage amounts, and with large wage amounts come large amounts of taxes, which also raises the likelihood of you getting penalized for filing them late. Also, if you're waiting on a disability statement, don't hold on to your bonus run to try to do these together. Third-party sick pay. First, it's important to remember that you have to report taxable and non-taxable sick pay. As you know, insurance carriers tend to be slow in getting out annual disability statements, but you don't have to wait until they get around to sending it out. Call ahead. Request yours as soon as possible. Another thing to keep in mind is if your third party is going through payroll, it will be included on your W-2. So make sure you let your carrier know not to produce W-2s. Voids or manual checks. All adjustments done in January will be manual checks. If you need live checks dated for the closing year, they absolutely cannot be issued after December 31st. Fringe benefits. These are usually non-cash benefits like car allowances, PUC or personal use of company car, education, tuition assistance, moving expenses, S-Corp health, and so on. Check out IRS publication 15B for a full guide to fringe benefits. Anyways, these need to run with a payroll that has regular earnings to be able to take the appropriate taxes. Next, let's talk about W-2s. The end goal of all these adjustment runs is to ultimately get an accurate W-2 to your employee and to the SSA by January 31st. That's why it's so important to make sure you are cleaning up everything now. Save your employees a delay in their tax filings and save yourself amendments by verifying employee information before January. How? Some really awesome payroll providers will send you a W-2 report, which is a preview of all of your employees' information that will print on the W-2s. Go through that. Double check names, socials, addresses. If verifying socials seem like too big of a pain, Complete Payroll offers a Social Security number verification service. Just saying. Also, make sure you verify box 14 of the W-2. Everyone has that one drawer in their house where they put their most random junk. Well, box 14 is like the W-2's junk drawer. Things that get reported here range from the lease value of a vehicle provided to your employee, to New York State paid family leave, SDI, union dues, non-taxable income, and more. Also, if you have more than 250 W-2s, you're required to report the aggregate cost of employer-sponsored healthcare. Aggregate cost just means all employee and employer contributions. This goes in box 12DD. ACA and 1095Cs. It's not just W-2s that we need to get to the employee by January 31st. If you are an applicable large employer, you need to get 1095Cs to your employees as well. ACA notices for 2015 just started going out, and the penalty amounts are scary. So make sure you check your setup or get set up if you've been holding out for it to go away. Also, if you have 50 or more employees or FTEs and you're not reporting your employer-sponsored healthcare to the IRS, we strongly recommend that you start doing so. 1099s. 1099s are the black sheep of the annual form family. Everyone is so focused on getting W-2s and 1095s out that we forget all about the 1099s, and that they also have the same due date to the individual and are due to the IRS by January 31st, just like the W-2s. Make sure you don't forget about these and get these called in as soon as possible. New York State paid family leave. 2018 was the first year to be able to claim New York State paid family leave. In 2017, we saw the premiums withheld from the employees in box 14 of the W-2. This year, anyone that had paid family leave will also have 1099s to issue to those employees for the benefit paid out. Insurance carriers are required by law to provide those to your employees, unless your paid family leave is self-insured. So, that's it, right? Once 2018 year-end is covered, you can kick your feet up and just relax? False. There's plenty that you can do to make sure that 2019 gets off to a good start as well, like update your employees' deductions. This includes medical, dental, life insurance, 401k. Make sure you update your time off balances and your company benefits and rates. Send your payroll company any notices of unemployment tax rate changes, frequency changes, or any agency notices received. If you have any employees claiming exempt from federal income tax, their W-4 is only valid for 1 calendar year. To continue to be exempt, employees must file a new W-4 by February 16th. Make sure they do so. Look, the people at your payroll company have friends and family, people they love, people they want to spend time with. Help them, help you, help them, okay? Good. Happy holidays from everyone at Complete Payroll. That's a long script, man. I get like, have any tax questions you want me to explain? Comment below or shoot me an email at ashleyexplains@completepayroll.com. Thanks for watching.